Most people spend their entire lives chasing money and still end up broke. Charlie Munger once said, "If you can't control your mind, you can't control your money." Today, you're not going to hear motivational fluff. You're not going to get a list of hot stocks or a get-rich-quick scheme. You're going to hear the mental models of a man who quietly built wealth that dwarfed 99% of investors. This is the Charlie Munger blueprint for getting rich by thinking better than everyone else. Charlie Munger didn't try to be the smartest man in the room. He tried to be the one who made the fewest mistakes. He said, "It is remarkable how much long-term advantage we have gotten by being consistently not stupid." Think about that. Not by being brilliant, but by simply avoiding stupidity. The world of finance is filled with people chasing brilliance. They chase crypto hype, jumping on coins with dog faces, hoping to turn $100 into $1 million overnight. They chase meme stocks, pouring their savings into companies based on a social media trend, only to see it all vanish. They crave overnight success, listening to gurus who promise impossible returns with no risk. This is the path of financial chaos. It's impulsive, it's emotional. It's a lottery ticket disguised as an investment strategy. Charlie avoided all of it. He saw the shortcuts for what they were, traps. He understood that emotional investing, buying in a panic, selling in a panic, is the fastest way to lose. He actively rejected complicated strategies, knowing that complexity often hides risk and fees. His secret wasn't some hidden genius. It was discipline. It was the simple, profound act of systematically sidestepping foolishness while others sprinted toward it. The world tells you to be smarter. Munger would tell you to be less dumb. The difference is everything. Munger believed in brutal accountability. He said, "If you keep losing, the common answer is, you're doing something wrong." It's a hard truth most people don't want to hear. When things go wrong, the instinct is to blame external forces. People blame the market, they blame bad luck. They blame the timing of their investment or the state of the economy. They blame the government, the algorithms, the insiders. Everyone is a victim of circumstance. Charlie had no time for this. He blamed bad habits. He blamed bad thinking. He blamed a lack of discipline. For Munger, financial failure is almost always self-inflicted. It's the result of procrastination, of putting off learning what you need to learn. It's the outcome of wasting hours scrolling endlessly through feeds that add no value to your life. It's the consequence of revenge spending after a bad day or making a huge financial decision based on a fleeting emotion. These aren't market failures, they are personal failures. The contrast is stark. On one side, you have undisciplined chaos. On the other, you have disciplined routine, reading, studying, planning, and executing with a clear mind. The market doesn't owe you anything. You get what you deserve based on the quality of your decisions. Munger's wealth didn't come from finance alone. It came from borrowing ideas from everywhere. He famously said, "To the man with only a hammer, every problem looks like a nail." If your only tool is a finance textbook, then every investment problem will look like a numbers problem. But the world is not that simple. So, Charlie built a latticework of mental models from different disciplines. He didn't just study balance sheets. He studied psychology to understand human bias. He studied physics to understand equilibrium and feedback loops. He studied history to understand cycles of boom and bust. He studied biology to understand evolution and adaptation in business ecosystems. He even studied engineering to understand systems and their failure points. He built a mind that recognized patterns other people didn't even see. While a typical investor was looking at a price-to-earnings ratio, Munger was seeing the psychological biases driving the market, the historical parallels to the current situation, and the biological imperatives guiding consumer behavior. This multidisciplinary approach is the ultimate advantage. It allows you to see the world in 3 dimensions while everyone else is staring at a flat screen. Money, in the long run, doesn't flow to the person who knows the most about one thing. It flows to the person who can connect the dots between all things. It flows to people who can see what others are blind to. Patience is the billionaire skill. Munger said, "The big money is not in the buying or the selling, but in the waiting." This is perhaps the most difficult lesson for the modern mind to accept. We live in an age of instant gratification. We want results today. We want our food delivered in minutes, our entertainment on demand, and our wealth generated instantly. The stock market is treated like a slot machine. Pull the lever and hope for a jackpot. Munger played a different game entirely. He waited for years, he waited for decades. He would identify a great business, buy it at a fair price, and then do the hardest thing of all, nothing. He let time and the power of compounding do the heavy lifting. He understood that true wealth is not created in a flurry of activity, but in the quiet, relentless march of time. A great business, like a great tree, needs time to grow. You can't water it 10 times a day and expect it to grow 10 times as fast. You plant the seed, you nurture it, and you wait. Patience is what separated him from the crowd. Impatience is what makes most people broke. They sell their winners too early to lock in a small gain and hold their losers too long, hoping to break even. They can't stand the idea of waiting. Munger's fortune was built on his almost inhuman ability to sit and wait. If you want to understand the world, you must understand incentives. Munger said, "Show me the incentive, and I will show you the outcome." This is one of the most powerful mental models you can ever possess. It cuts through the noise, the corporate jargon, and the political speeches to reveal the raw underlying motivation for almost every human action. Why do some executives stretch the truth on earnings calls? Look at their bonus structure. It's tied to the stock price. The incentive is to pump the stock. Why do companies sometimes cut corners on quality or safety? Look at the pressure for quarterly profits. The incentive is to reduce costs right now. Why do markets behave irrationally, creating massive bubbles and devastating crashes? Look at the incentives of fund managers who are rewarded for short-term performance and herding with the crowd. If you can master the art of thinking in terms of incentives, you can predict the future with a startling degree of accuracy. You can predict the actions of people, of businesses, of governments, and of entire markets. You stop being surprised by corporate scandals or political blunders. You see them as the logical, predictable outcomes of a given incentive structure. Incentives are the hidden wires that guide the puppet show of human affairs. Learn to see the wires and you will understand the dance. In a world obsessed with excitement, being boring is a superpower. Munger said, "Take a simple idea and take it seriously. Most investors crave excitement. They want drama. They want to be part of the action, the next big thing. They want a story to tell their friends at a party. This desire for entertainment is a direct path to poor returns." Munger got rich by being relentlessly, profoundly boring. His strategy was simple. First, buy great businesses, companies with durable competitive advantages, run by honest and able people. Second, hold them. Don't trade them. Don't time the market. Just own them. Third, do nothing. Let them compound year after year, decade after decade. He didn't chase hype. He didn't care about what was popular. He chased quality, and he was willing to look foolish or fall behind in the short term to be right in the long term. He understood that the real work is done in the initial analysis. Once you've found a truly exceptional business, the best course of action is often to get out of the way and let it work its magic. The financial industry is built on the illusion of action. They want you to trade, to switch funds, to rebalance constantly, because that's how they make money. Munger's approach was the opposite. He knew that the most profitable action is often inaction. Comparison is the thief of rationality. Munger said, "If you want to be miserable, compare yourself to others." This is not just a platitude. It's a fundamental principle of sound investing and a happy life. In the age of social media, comparison is a constant poison. You scroll through your feed and see someone who bought a cryptocurrency at the perfect time and is now flaunting their new car. You see an influencer showing off a portfolio that seems to only go up. The feeling that creeps in is envy, followed by a fear of missing out. This is when rationality dies. Comparison kills your patience. Why should you wait for a 7% annual return when someone else just made 1,000% in a week? Comparison kills your discipline. You abandon your carefully constructed plan to chase someone else's lottery ticket. Comparison kills your focus. You stop building your own life because you too busy watching someone else's highlight reel. You make poor decisions not based on your own goals and risk tolerance, but on the pressure to keep up with an illusion. Munger and Buffett built their empire in Omaha, far from the distracting noise of Wall Street. They weren't comparing themselves to anyone, they were running their own race. If you want to build real wealth, you must do the same. So, if you want Munger-level results, you must follow the Munger-level blueprint. It's not about being a genius. It's about a way of thinking. First, avoid stupidity. Stop making unforced errors. Second, think broadly. Build a latticework of models from different fields. Third, be brutally honest with yourself. Own your mistakes and your bad habits. Fourth, let patience do the work. The biggest returns come from waiting. Fifth, understand incentives. They explain almost everything. Sixth, be boring. Excitement is the enemy of returns. And finally, take simple ideas seriously. Find a sound principle and stick with it for a lifetime. Charlie didn't chase riches. He built a mind so rational that wealth had no choice but to follow. Build the mind, and the wealth will come. If you want a full breakdown of how Munger chose billion-dollar investments, comment Munger Mindset, and I'll see you in the next video.